Good afternoon, everyone. My name is Dustin Moore. I am with Sunwest Bank, and I manage the branch here in Flagstaff. Today, we will discuss banking services that are available for small businesses. This presentation content is brought to you by the FDIC and the Small Business Administration. Thank you for taking the time today to learn more about banking services for your business. We will break down today's presentation into 3 sections. Section 1 is about banking services. Section 2 will be about financing options and sources. Finally, Section 3, we will discuss avoiding scams and fraud. Before we get into each section, let's ask ourselves, how do we make this educational broadcast less boring? And the answer is, I have no idea, but I will try. Okay, let's take a moment to discuss our learning objectives. First, the benefits of building effective, long-term relationships with your bankers. This can include a branch manager like myself, as well as lenders and business advisors. Other objectives will be what to consider when choosing a financial institution, including advantages and risks associated with each service and product. We will also touch point on types of financing options. And the last few objectives will be what to consider when you are evaluating financing options, ways to improve your chances of getting a loan, and ways to recognize and avoid small business fraud, scams, and cybersecurity risks. So now, let's discuss banking services. First and foremost, avoid any myths you may have heard about banks. For example, they don't want my business because I'm too small, or they won't make small loans, or that you need perfect credit history. Second, meet the staff. True bankers want to help your business grow and prosper. Besides, you should enjoy going to the bank, not dread it. The right bank should provide amazing customer service, give you easy access to your money, and have proper technology to ensure your financial business needs are being met. As far as the safety of your money, the Federal Deposit Insurance Corporation, also known as FDIC, insures bank depositors up to $250,000. Generally, most banks offer similar products, such as checking accounts, debit cards, savings accounts, payroll services, and merchant services. The deciding factor for those products will come down to fee structure. How much will this cost me? So be sure when you're reviewing institutions that you take a look at their fee schedules. This will give you a list of products and costs associated with them. If in doubt, don't be afraid to talk to a banker and ask questions. Now, in regards to checking accounts, there are a few things to take into consideration. For some accounts, transaction volume may determine the account that fits you best, while others may require you to maintain a certain balance in the account at all times. Another thing to note is that all banks have their own form of evaluating applicants. For example, check systems. This system reviews any poor performance previously conducted by the applicant. When reviewing account services, consider products such as debit card limits and for options for preloaded cards to avoid adding unnecessary signers to the account. Also, savings accounts and certificates of deposit can help you show lenders that you have some cash reserves, and those funds could potentially act as collateral to secure business credit. Now, what about payroll? How do you plan to pay your employees? I'm sure they would love a paycheck. Look for payroll products that offer easy record keeping, direct deposit for employees, as well as a zero balance feature to help prevent fraud. Also, think about the possibility of having a separate checking account established solely for payroll to help aid in proper bookkeeping. But remember, services come at a cost, so be sure to weigh your options. Up next is finding the right merchant services provider. The right provider will have user-friendly card reader terminals and will help assist with setting up your online portal that will allow your payments to come through your company's webpage. More helpful training or counseling can be found at sba.gov and fdic.gov/moneysmart. Okay, to ensure all of you haven't passed out yet, let's recap Section 1. Be sure to build banking relationships early on. Choose a bank based on its accessibility, customer service, and products tailored to small businesses. Increase your business efficiency through payroll services and merchant processing. Lastly, reconcile all accounts to help mitigate cybersecurity issues. Let's move on to section 2, which will include financing options, sources, and financial readiness. Financing can come in many forms. For example, they could be gifts, savings accounts, term loans, or lines of credit. Savings, gifts, and informal loans are the #1 form of financing for startup businesses. Gifts may be counted as business capital, so make sure you consult an accountant. Be sure that payments towards informal loans are part of your business cash flow. Term loans, also known as installment loans, have a set amount and is dispersed as a lump sum once the loan is approved. Repayment is set for a certain number of months or years. Your monthly payment remains the same every month. Term loans generally are collateralized as well. Lines of credit allow for flexibility in repayment of drawing on the funds. In a way, you can think of it as a larger credit card, but generally with a higher limit. Lines of credit require annual credit checks and financial review. If the line of credit is unsecured or not collateralized, the interest rates tend to be priced higher than those that are collateralized. And of course, there are business credit cards. Business credit cards have the advantage of having authorized users. These authorized users also can have set limits to minimize improper use of the card. Some loans can be used for a specific purpose. For example, if you are in the farming industry, they have agricultural loans. Or if you're in the manufacturing business, they have specific programs for that as well. There are even options for when natural disasters occur. Other options could include equipment leasing, inventory financing, or getting advances from your merchant services provider. There are even options for nonprofits and minority-owned businesses. For additional programs, you can visit the USDA, US Treasury, the Chamber of Commerce, the Small Business Administration, and your local government websites. Now, how to improve your chances of getting a small business loan? First, strengthen your personal business credit history, separate your personal and business finances, and understand the 5 C's of credit. These 5 C's of credit are capacity, which is the ability to repay a loan, collateral, the security to repay the loan, credit history, your historical performance of credit, conditions, such as terms of the loan and the current business environment, and lastly, character, meaning integrity, reputation, and references. Be sure to pay your credit bills on time, every time. It sounds simple. That's because it is. The better your credit score, the better your interest rate. So what happens if your credit needs repaired? I would recommend visiting consumerfinance.gov and the SBA.gov. Also, avoid commingling business and personal expenses. Maintain accurate bookkeeping and get a reputable accountant. Now, to recap. Financing can include your own savings, and remember, you may qualify for government programs depending on the purpose of the loan. Be sure to evaluate each benefit and risks for both banking and non-banking finance. Up next is our final section, avoiding frauds and scams. When speaking with your institution, inquire about secure access protocols, tips to avoid forged checks, as well as protecting credit cards and reconciling accounts. Fraud and scams can come in many forms, such as compromised emails, data breaches, malware, and phishing. Luckily, there are resources available through the FTC and FBI website to help with training and education. To recap, reflect on what banking and/or lending services your company needs and utilize reputable sources like the FDIC, SBA, and the FTC. Of course, if you need someone local to answer any questions or for assistance, do not hesitate to reach out to myself or my team. Now, before we complete today's training, I'd like to take a few minutes to talk about a brief history of Sunwest Bank and our philosophy. We were founded in 1969 in Dustin, California, with the promise to help small businesses and the community grow. Then, we went by the name of Santiago Bank. By 1980, after a decade of steady growth, the bank officially changed its name to Sunwest Bank, emphasizing on growth as an institution. The most pivotal moment in our history came during the financial crisis. Due to our strong balance sheet and history of conservative underwriting, we were able to acquire 5 failed banks from the FDIC. We've officially grown from a small local real estate bank into a regional bank serving multiple markets. Today, we are now headquartered in Irvine, California, but we still maintain a branch in Tustin, California. To this day, we focus on 2 things: helping entrepreneurs achieve their American dream and giving back to our communities. We specialize in working with small to medium-sized businesses, privately held corporations, family offices, and real estate developers and investors. We are the bank built by entrepreneurs for entrepreneurs. Thanks, everyone.
Whoa, good gal dang. This old stagecoach is letting me down. Sure breaks down a lot too. Darn uncomfortable. Why would I use this when you can use this? If you're tired of your broken down, slow moving big bank, then give us a call at Sunwest, a responsive entrepreneurial business bank that puts you first.
Good afternoon, everyone. My name is Dustin Moore. I am with Sunwest Bank, and I manage the branch here in Flagstaff. Today, we will briefly discuss how to prepare for financing and what to bring with you when applying at an institution. Please keep in mind this is a general needs list, and each institution will have their own specific requirements. Okay, first, be prepared to provide a profit and loss statement. This is also known as a P&L. This document shows your company's assets and liabilities. A cash flow projection sheet is another document to have. This statement shows the company's incoming and outgoing cash flow. Next, have a detailed business plan along with current and historical financial statements. In addition, bring a completed PFS, that's also known as a personal financial statement, and tax returns. Generally, a minimum of 2 years of personal and business returns will be required. Other elements of a loan package may include information on the collateral, purchase agreements, or contracts. Please keep in mind, these requirements are general and can vary between institutions. It also does not apply to startup businesses. If you are a startup business, your financing options are sweat equity, a business credit card, and/or your family members. The bank of mom and dad might be your most cost-effective option. That being said, it is important to keep immaculate bookkeeping when you are just starting out. Get familiar with those documents I previously mentioned so that when you do become an established business, you are already prepared to visit with a lender. I hope this short presentation helps provide clarity when you are applying for a loan and what to provide the lender. And of course, if you have any questions or need assistance, please do not hesitate to reach out to me or my branch directly. Thanks, everyone.